Good day. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for this Tuesday evening, the 29th of December, 2020. I want to start off by wishing all a very happy new year and thank you. Yeah, you've helped make our channel more popular. It's not where we want it to be, but none ever are, but we want to grow it this year. We've never done the monetization, tried to advertise it on YouTube. This will be the year where we start pushing that out. We had to get our format straight, and we used the past year to do that, and we're there at this point. Now, I am going to be taking off, and while I am gone, you can get my SPDR videos. Now, what do I mean by that? I mean my subscription videos. When I'm gone, I still put these out. And the reason is I can take my computer with me. I've got my headset. I just record in it, and I put out for my clientele, my paid clientele. They're still getting all the information that they need. You won't, because if you're just not one of those paid subscribers, what happens is you won't see me until the weekend of January 7th. So I come back on Thursday, probably if the markets are active, I'll probably do a video Friday, or I'll do them over the weekend. So either the 8th or the 9th, I'll be doing the videos again in these. But that's a lot of time. What's important about that time? People are going to be repositioning, so you have to make some decisions. You can go to our website, under the word research, everything you need to know is right there. Decide where your subscription is. It's basically the cost of coffee. I'm not laughing. It's I go out and I get a big thing. By the time I tip, I'm $7, $8. So I'm basically there. 26 videos a month, each one running anywhere from 17 to 30 minutes. Pretty good deal. So in the markets, where are we now? Because this is your last video of the year. You're in the wrap-up. If you're trying to make something out of nothing, you're going to get yourself into trouble. This is where the window dressing happens. The A-team traders are going away. They're going to do whatever they do over this holiday period, and then they start working their way in. The first week of the year can be where they reposition, or they can gradually work their way into that first part. Mitch McConnell today set a new standard for that $2,000 vote. He's going to tie two parts to it. He wants to deal with fraud, what they want a look-at-see at fraud election. The look-see is the right grammar. And then he wants to tie something to the bill about the social media areas where there's no liability for user content. We'll see where he gets on that, because there have to be some laws. But I think that's a popular thing that both Democrats and Republicans want to see. The problem is it's not clean. So now you're days away. They want to go away on Sunday for the new year. You think they're flying right back? They're not going to. So does that put this $2,000 bill in progress? And that's what we call the Cash Act. Does it deflate it? Maybe. I think it does to a degree. So you got to watch tonight what the futures are doing. But when we look at the tech sector, you made a new high. So let's all do this. Let's thank Santa Claus. He did come to market, and he did make new highs on many of these markets and the indices. You can see how the market's still very much in an uptrend. You got the higher lows, higher highs. The market's been running against the upper Bollinger Band and not getting on the other side of it. Very important. And it's just bullish as can be there. And now it's dragging the slow stochastic and trying to force it to embed. If it does so, my subscribers will talk about that when I'm away on vacation. In PAVE, you've entered sideways churning in the market. This is where you call your psychiatrist up and say, I need help. You think the market's going to break out? It doesn't. You think it's going to go down to the breakout? It doesn't. It just churns. This becomes either a base or a top. You have to wait to see which way it's going. Momentum is turning down, but it doesn't mean anything. I've seen these things happen. And whenever I see one of those pipes, you'll hear me tell you, call your psychiatrist if you're going to trade in that. In XLI, you're still bullish. This is basically a pullback in a market that still has the embedded reading. Lose it, and then I think you can get back to the 18-day average. Hold it, and this should get some footing under it. But again, you're at that end of the year. It's very difficult. In the energy sector, still in an uptrend, higher lows, higher highs. The API numbers that came out at 3:30 this afternoon Chicago time were friendly. So that's a little bit different. We'll see if Baker Hughes numbers add more rigs. I would think that they do over time here as prices keep creeping higher. And with all the people that in that energy sector that bought out companies that couldn't do well but had wells in the ground already ready to go. They just never had brought in the platforms to open those wells up. They can do that very quickly. QQQ, still in an uptrend, still with an embedded reading until it's lost. Game's on there. Emerging markets, one of the most popular trades I think you're going to read about for 2021. People want to own these. Will it get crowded and give you breaks to get in? Sure you will. What's the chart formation? Very bullish. You got the 18 over the 200 and 100-day average, and it keeps coming up. It backs off just enough on the embedded reading to come down to a key moving average that I discuss in my subscriber video, letting traders come into the market. I don't discuss that in these videos here. Gold. The resistance should be the 18-day average of closes. It is. The momentum's up. The swing line's up, but the bias isn't with that. In the GDX, you're still under the 18-day average in a market that is still in oversold territory. There's nothing to do there. This market's gone flat on you. It'll come alive, just got to wait for it to do it. Silver market is not in a trend, SLV. You've got a lower low, higher high, and you're overbought. This is just a wide swinging market now. TLT, as you take a look at how this weekly bind, these are, by the way, a lot of these are weekly. I hope you know what I'm doing for you right now. I'm not giving you daily. I'm trying to give you the weeklies as we keep up with this. Lower highs, lower lows. If you didn't pay attention to that, I started off with some dailies, but then I bring it in for you, so pay attention. I'm just trying to give you the most I can because I'm not going to be here this weekend. Still in an overall downtrend in the market. FXE still in an overall uptrend, trying to embed the reading, saying it wants to work higher at this point. Jets. The daily charts have turned down. This chart is overbought in a uptrend, but it's questionable. A lot of resistance starting to form at 24.34 to 24.65. This is the ag commodities, and they have been a powerhouse. For those of you that take my combo, I have been telling traders to buy in the meal market recently and the other, and it turned out to be an interesting day, I'll tell you that. Good one, a nice way to leave. Higher lows, higher highs, and as you can see, embedded reading. I still remain fully committed to the bull side. This is how the news would look there. So my big news for you, it's really simple. I want to wish you all a happy new year. Wanted to give you a little bit of a gift here, as I'm not going to be around to do the end of the week charts. This is how you look here just at the second day of this week, but you only have 2 more days that make up the week, and then you're done. Will it be a big change? Don't know. Subscriber video. Happy New Year. I will see you all the weekend at the very least of January 7th, Friday or Saturday of that week. Take care.